Hi, I'd like to talk a little bit about the special filing requirement for dependents. This page can be found in your Pub 4012 on page A2. I'd like you to grab a pen. We're going to talk about option 3 under single dependents and option 4 under married dependents. Those two descriptions are very hard to understand. A better explanation would be the following. A dependent must file a return if either of the following apply. Number 1, gross income is greater than $12,200. Or number 2, gross income is greater than $1,100 and unearned income is greater than $350. We see very few of the second option in our sites, but the fact is, if they have unearned income, and by unearned income I mean interest, dividends, that type of thing, something they did not work for, they did not get a W-2 for. If that's the case, and that unearned income for a dependent is greater than $350, they do have a filing obligation. Refundable versus non-refundable. I want to remind you of the difference between these two. Non-refundable credits lower the taxpayer's income tax obligation. Non-refundable credits, which are large enough, can lower the income tax obligation to zero. It does not lower tax obligations for self-employment or tax on early withdrawal from a 401k or an IRA, nor can it increase a refund. A refundable credit not only lowers the taxpayer's income tax obligation, it can also lower the other tax obligations, such as those I just listed, and it can increase a refund. You will find a list of non-refundable credits in tab G of your publication 4012. The earned income credit is one example of a refundable credit. The Earned Income Tax Credit, or EITC, is a tax credit for people who work and earn low to moderate incomes. Those who qualify and claim the credit could pay less federal tax, pay no tax, or even get a tax refund. Generally, income and family size determine eligibility and the earned income tax credit amount you can receive. You will find the section for Earned Income Credit in your Pub 4012, Section I. There are various types of earned income as seen on page I-1. The income on the left lists income that is considered earned. Most of that income requires actual participation in earning. There are exceptions, such as taxable long-term disability payments. You will notice the incomes on the right are incomes received without being employed, such as interest, child support, Social Security, or retirement incomes, just to name a few. EIC eligibility. All workers claiming the Earned Income Tax Credit must have a Social Security number that is valid for employment and issued before the due date of the return, including extensions. Notice I said Social Security number and not ITIN. ITINs do not qualify for the Earned Income Tax Credit. Generally, they must be a United States citizen or a resident alien for the entire year. They must have earned income, and they must meet the investment income limitation of less than $3,500 for the year. They are not eligible in the following circumstances. They are not eligible as they choose a filing status of married filing separate, nor if they file a Form 2555 or the EZ form, and they may not be the qualifying child of another person. Other eligibility requirements for a taxpayer with a qualifying child are: the child must meet the relationship, age, and residency tests. The child does not have to be the taxpayer's dependent. This is important in cases of divorced parents. The qualifying child cannot be a qualifying child of another person, and the qualifying child must have a Social Security number. A taxpayer without a qualifying child has these requirements. They must be between age 25 and 64 during the tax year. They must have lived in the United States more than half the year, and they can't be a dependent of a qualifying child of another person. TaxSlayer does the work for us. It is based on filing status, number of qualifying children, earned income, and adjusted gross income. The maximum amount of the credit for tax year 2019 is $6,557. TaxSlayer does all of the work for us. You can have up to 3 children as an earned income credit benefit, but that's the maximum number of children that you can have. Earned income due diligence checklist. Please do not use this. VITA sites are exempt from using. If you fill it out and even one question is marked incorrectly, the credit will not calculate properly. It takes too much time to create it and even more time to fix any errors. If you've seen this screen, run fast and run hard. Do not fill it out. Back out of that particular screen. Common errors for the earned income credit include claiming a child who doesn't meet the residency and relationship requirements, married taxpayers incorrectly filing as single or head of household, incorrectly reporting income, particularly income and expenses from self-employment, incorrect Social Security numbers, and filling in the due diligence checklist wrong. We are not required to use it. Please, please, please do not. Also, we should alert the taxpayer that by law, refunds for taxpayers with the earned income credit and or the refundable child tax credit will be held until mid-February. This is a fraud prevention effort. That means that their refund will not be issued till the middle of February.